gold soared 64% in 2025 for its biggest annual gain. But this isn't random. There is a connected global story behind it. Let's break it down. By the end of this video, you will understand why investors are pouring money into precious metals and why this matters for the economy. Point number 1. Global safe haven demand. When markets feel unstable, investors flock to gold and silver as safe haven, assets that hold value when stocks and currencies falter. Gold and silver reached record prices as investors worried about US economic policies, geopolitical tensions, and the weakening dollar. The US dollar index fell, making dollar price metals cheaper for foreign investors and boosting demand. This means that global uncertainty, from political standoffs to tariff threats, pushes money into metals because they are less volatile than stocks or bonds right now. Point number 2. Central banks and institutional demand. It's not just individual investors. Central banks are buying record amount of gold. Gold analysts now expect prices to go even higher by end of 2026, partly because central bank buying remains strong and ETF demand is surging. When big financial institutions buy gold to diversify reserves away from currencies like the US dollar, gold demand spikes and so do prices. Goldman Sachs recently raised its target for gold prices, citing massive private sector and ETF demand along with central bank buying. Point number 3. Interest rates and US dollar dynamics. Interest rates influence precious metals heavily because gold and silver don't pay interest. Markets are pricing in the possibility of multiple rate cuts by the US Federal Reserve in 2026, and that makes gold more attractive. When interest rates fall, bonds and cash pay less. Investors look for assets that preserve purchasing power. That often means gold and silver. A weaker dollar, as we are seeing this year, also helps push metal prices up globally. Point number 4. Geopolitical tensions and market stress. It is not just economics, politics matter too. Gold and silver prices climbed in response to global political risks and economic uncertainty involving trade tensions and conflict. Investors hedge when they see political instability, military tensions, or unpredictable policy changes. Metals like gold became a safety cushion. Point number 5. Silver's unique dual demand. While gold mostly rises as a safe haven, silver has another story too: industrial demand. Silver has surged partly because of its use in technology and green industries like solar energy, electronics, and EVs, adding structural demand beyond just safe haven buying. This means silver doesn't just get bought for safety, it's needed in real world products, which pushes prices even higher when demand rises. Point number 6. Seasonal and local demand. In markets like India, seasonal demand can push prices higher too. Gold premiums in markets reached highs not seen since 2014 due to expectations of import duty changes, signaling buying ahead of policy announcements. Domestic factors like festive buying and policy anticipation can make the metals even more expensive locally beyond global price moves. This rally isn't random. It is linked to big macroeconomic shifts, policy expectations, geopolitical risks, and real demand changes.